Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, May the 27th, 2025. As you know, today is Tuesday, Gary's Market Forecast or GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4 hour, the 1 hour, the 30 and the 15-minute time frames align prior to trading the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart. We have high level overview. Wave one is done, topped out at 114.72. We're in the process of stair stepping lower in what we believe is a wave two, down at a 78.6% retracement around 80. This should take probably a few more years to get down here, but that's the plan. This comes back from 2007. We bottomed over here at 70.53. 15 years later, in 2022, we topped out. We had talked about reaching this 115 to 120 zone before we would reverse. Not too shabby when you come to 114.72, target of 115. Now we believe that we have a wave 1-2 working on a 3 down, and we're looking for this stair-stepping phenomenon to continue for at least probably a few more years. We've been in about 3 years since the top in reverse went 22, and we expect probably a few more years as we continue lower. This is a very important support level. From this prior low to high represents a 38.2% retracement. But more importantly is the COVID low over here in 2020 to the current high of 114.72. It is a 618 retracement. So once we break that, it opens the door. If we can break down below this, it opens the door to go not only back below this low, but the extensions down here around 85, 82 area. So let's jump into the charting platform to show you what we're talking about. Last week, we were talking about this. If we started to break out of the trend channel and we can break this green box, then we're likely going to continue lower, making a new low toward 97, 96, and below that would be our 95 level. Well, remember we talked about from the prior COVID low, which is over here, and from this COVID low to the swing point high, we are holding right at a 618 retracement. So you know the rule. If we're able to close a candle body below this level, then we have a 75% chance we're going to go toward this 1448 level, and then a 70+% chance we're going to go toward this 1272. There's your 85, 82 level, which gets awfully close to our target zone. So we still need this to break because by holding from the COVID low to the 618, if we go breaking out, then it could extend us to make some new highs over here, pushing us into the upper quadrant. So if we look at that in a 2-point tool here from the swing point high to the current swing point low, that would open the door to 116, 119, maybe as high as 124. But that's not the plan. We are clearly in a downtrend at the moment. And in order for us to change the way we feel about that and start thinking about something like the dollar strengthening to where we go way up here, that would take a lot of movement and not just holding this little 618, 786 zone down here, but we'd have to break back above the Magic Fibo line, which is critical, And then once we do that, we can take from the prior high to low. Then it starts to set the tone. We would have to start breaking not only the magic Fibo, but we would have this 618786 zone up here, which is this big pink box. So we'd have to break the magic Fibo, then break above this big pink box here in order for us to open the door for us to go higher, which is why I think that's not the direction we're headed. Amen. So this bounce should just fizzle. And ultimately, once we close below that little green box right here, this dark one, then the door is ajar to make some new swing point lows, which is highly probable. So the likelihood we go breaking out and breaking up is very low. The likelihood we continue with another lower high, lower low is very high, especially once we close below this 786 level, which is the bottom of this green box, Mr. Tucson. We close below that, and it's game over. We're going down to 97, 70 plus plus, we're going to 96, and I would look for us even continuation toward this 95. As far as the software is concerned, it's all over it. You look at the higher time frame, the daily still pushing toward oversold, so I would expect lower high, lower low as this continues. More importantly, the monthly is very steep slope angle separation down. So this is why we talked about the last few weeks that as my weekly started to turn and we got a little bounce, it was likely going to slingshot back over in the direction of the monthly, which you can see here. The monthly is clearly PAI slope, definitely steep slope down. Trend momentum, both trend momentum 1 and 2 have crossed. We got angle separation. I expect more downside in the coming months. The weekly did what we asked it to do last time we were there. As the weekly started to turn up, I said the likelihood we were going to cycle up was very low. The likelihood we were going to go up and slingshot down was very high. And you see in the process, that's what we're doing. So this is a critical level we're holding because it is that 618, 786 of the smaller move. And from the bigger COVID low move, it's the 618 retracement area. So once we break both of those, that's why this is so important. All right, Mr. Tucson, here's the area in which we need to break to set the tone. We're going to make some new lows. And if we start making new lows down here, guess what that means? We're breaking that 618 up here, which is from the COVID low. So this is like the double whammy. We start breaking down here, then it opens the door. We closing below this 618 level, which again then puts the pressure of 75% chance. You're coming down here at 85, 70 plus, we're going to 82. And what is our ultimate target? Somewhere between 82 and 78. We're kind of rounding it up around 80. So again, this probably will take a few more years to get down here, but that's why we expect to keep selling rallies and this to push lower. Amen. All right. Now looking at the euro has reached our prior targets. We talked about this from this prior swing point high to swing point low. When we started closing above 108, we said we have a very high probability we're going to go to 113.60, 114.95. We did that. And like Q, we got a little pullback. Now we're trying to test that same next break level. And I'll zoom this in for you so you can see what we're talking about. From that high that we reached our targets, then we got this pullback, which I warned you about. So look, now that we reached the target, we're probably coming back down. And now from the prior high to low, we're testing that 618, 786 retracement. So if this cannot go breaking out and continue to go up to 116, back to 117, and onward and upward we go to some new highs, then there's a chance we could get another break lower, which would bring us toward the magic Fibo, which is a little bit lower down here. So be careful that this is a critical level that we're testing. We need to close above, not a wick, but a body, close above this area before we then start focusing on 116.50, 117.16 area. I do think we're going to continue to go higher and higher, even toward this 118 and change, but we could possibly, maybe this is an A. What if that's my A wave right there, Mr. Tucson? Let me actually use this one instead of arrows. I'll clean that up. What if this is the A wave, this down is my A wave, this move up is my B wave, and we could come back down in the C wave, which would put us right around that magic Fibo. That wouldn't be unheard of to then bounce to go on and reach these extensions. But that's why I'm watching price action very closely. If this breaks and we start closing above this area, then by all means, we'll start targeting another couple of hundred pips toward 116.50, 117.16, onward and upwards toward that 118. Amen? But if this holds and we start breaking back down, then you'll look for a critical level on the way back down, and that would be from this swing point low up to this current swing point high, which is now here. We would need this little green box. I'm going to stretch it back to the new parameter since we did make a new high. We would need to hold this 112/111.40 area. We hold that, then we're good to go for us to then maybe get another little retracement back to 618 retracement to then go breaking out. What if, Mr. Tucson, William Bruce, we actually come back down and we start closing below that 111.40 area, 111.14, excuse me, 111, yeah, 111.40. So we start closing below that, then it's likely we're going down to the magic Fibo. All right, everybody good? So the long of it, we need to close above this pink box to start targeting 116.50, 117-ish. If not, as long as the pullback holds this little support zone between 112 and 111.40, about 60 points, as long as we hold that, we still can bounce to go breaking out. If we don't hold it, then it sets this is likely the A, this is the B, and we are coming down in the C, which would bring us down here around this magic Fibo. What if, William Bruce, that actually occurs? We break down, we don't hold, we go down to magic Fibo. This would be a prime time buying opportunity for then the euro to go bouncing off the magic Fibo, and we'd start to shoot for our extensions up here, 116, 117, and 118. Fair enough? So be careful. This is very illuminating times. Do we go breaking out, or do we get a retracement before we go breaking out? Or does its retracement not hold this critical support zone? And once it does, the technical picture is screaming we're going down to the magic Fibo. Bottom line, we get the bigger correction down to magic Fibo, then it's a beautiful buying opportunity for us to go long. Fair enough? So back to what we do on Tuesdays is we look at our Elliott wave, and looking at this correction, I do believe this wave 1-2 is done, and we're working on going much higher, but it doesn't mean when your 2 is done, you're going up in 3, you can't get another pullback. Remember, we have a low, we have a high, so we got that support zone for us to test on the higher time frame. And yes, I do think we're going to go higher in the weeks, months, and years to come, but it's all about the corrective action. Looking at the software, again, just like the inverse of the dollar index, the monthly on the euro dollar is up. Steep slope, angle separation. Look at the dollar index, it is the exact opposite. That's why we call it inverse. The monthly is pushing lower, steep slope, angle separation down. The euro dollar monthly, inverse, steep slope, angle separation up. So I do think in the months to come, we're going to continue to grind higher. Our target, if the dollar index gets to 80, the euro dollar is going to get up here to this 135 to 146 area, and I'm fine tuning somewhere around that 140, 145. So that's still thousands of pips away for us to get to the designated target. Again, this will probably take a few years to get there. We're also testing the Magic Fibo on the monthly chart. So once we start breaking above, I would expect at some point when we start breaking above this, we're likely to come back to retest it before we bounce. And what would the software look like during it? You'll continue to push higher as we start breaking above. Then we'll start turning over as we come back to retest. And then we'll go slingshotting higher and higher in the years to come as we push toward this target. That is the plan. Amen? So in the short term, my weekly is doing the opposite of what the dollar index was slingshotting lower. This one's slingshotting higher. And that's particularly the trend that happens when your month is pushing up, you get a weekly to cycle. Then a month takes longer to cycle than a weekly by design. So then the weekly has to then turn over and start slingshotting higher and higher and higher for that monthly to cycle. And we believe, Mr. Tucson, as you can see, when we got this PAI hook, when it's red, blue, and green hook up, and the trend momentum crosses up, green above the red, a monthly hook and a cross, as we like to refer to this as, a PAI hook, trend momentum cross, that equals a weekly cycle. Highest of highest probability. Why is that important to have software that designates what happens in advance, not past tense? Because when a monthly hooks and cross, you got 2 to 5 months for a weekly to cycle. When a weekly hooks and crosses, you got 2 to 5 weeks for a daily to cycle. And it goes through every time frame. Monthly hook and across, weekly cycles. Weekly hook and across, daily cycles. Daily hooks and across, 4-hour cycles. 4-hour hooks and crosses, 1-hour cycles. 1-hour hooks and crosses, 15-30 cycles. 15-minute hooks and crosses, 5-minute cycles, on and on. And I can, whether I'm trading Forex, futures, commodities, ETF, treasuries, works on all markets. And it tells me how long if I'm trading options. Well, if I'm trading a weekly PAI hook and I know the daily is going to cycle, then I know it takes me about 2 to 5 weeks for a daily to cycle. So if I'm doing options, I want to give it at least that 5-week period, maybe even go a month and a half, 2 months out, give it plenty of time for that daily to cycle, and then we give you targets where you're going. Amen? So is this finished? No. I think the monthly is going to continue higher in the months to come. And at some point, this will turn back over to slingshot higher like it's been doing. And we started slingshot, and we're going to continue this process, I think, over the next few years as we grind toward this target. That's the plan. Amen? In the short term, my daily's overbought. We got a little bit more upside perhaps, but I would not be surprised to see another one of these as we've been doing as of late. Daily turns over, slingshots higher, daily turns over, slingshots, and continues this slingshot phenomenon. Again, this is critical from the swing point high to swing point low. That's the 618 area. Do we get rejected to come back down? What would that look like? The daily software turns over, the daily software turns over, and we get to oversold territory. And what would that mean? Daily oversold, shooting for a daily cycle back up. Beautiful buying opportunity. Amen? All right. So remember what we're looking at. This could come back down, sure. This might be the A, this could be the B, and we come down in C. But the more we get toward this 108, 109 area, that would be a perfect area to buy, as my daily would be oversold and we'd be reaching that extension. And you could come back over here and I'll show you what that looks like. That would be these extensions down here around 101, 110, 109, 70 area. And if you notice the Magic Fibo, it is sloping upwards. So even as we start chopping and grinding sideways to lower, this will start flattening out maybe a little bit, but we could intersect somewhere down in these targets and bounce off the Magic Fibo to set up our extensions to the upside. So this is critical. Is this just a small little pullback before we go breaking out? If we start to retrace and we don't hold this green box, then we're definitely coming down here. And if we definitely see this coming down here, salivate to go long and shoot for these extensions on the upside. Just like we talked about weeks back when we were bottoming over here and we were down in this 102 area. And I was like, this is prime time for us to start bouncing and going higher. And then I called it after this little higher low. Software was setting up to go much higher. We had our weekly oversold looking for a weekly cycle up. And we talked about it long before. So I said this wave two was over and we were going up. And then even before we crossed this from the high to the low, this 108 area, 618 retracement, once you close above that, you have a 75% chance we're going up here. So if you go back in the archives, I was saying go long now, but if you're more conservative, wait until we get above this 108 area, above the 618, and then go long. You'll make about 600 plus pips going to the upside. Well, we pegged it down here, 600 plus pips toward the Magic Fibo. And then once we took out the 108, we certainly marched out 600 pips toward these targets. So both of those were based on technical analysis using the MPA 5 version 5.0 software, along with my God-given talent to read and interpret price on a chart. So what's it going to be? I take high probability, low risk, in this case, low risk, high reward, high probability trade. And that's where you get to these levels. When you start breaking above this, just like we did over here, we had a 75% chance we're going to 113.60. And I said that weeks and weeks and weeks in advance, gave you the target. That's how you do it. So even if you're conservative or if you want to be a little bit more aggressive, I kind of mentioned this should be the low and we should climb up to the Magic Fibo, but eventually we're going to break it, come back and then zoom higher, and exactly what we did. So in closing, again, zooming in, we're at a critical juncture. Right now, from the recent high to the current low, we're testing the 618. This is a level you should always have on every chart. I don't care what you're trading. You need your Magic Fibo and you need these levels because it typically you run into this zone and we could either retrace back. Well, where's my line in the sand if I start pushing lower? It doesn't mean because I got a red candle here that it's over and we're definitely coming down here. You have to break this support zone. And we're stuck between resistance and support. We have from the low to the high, we're holding the 618786 support. And then from the recent high to low, we're holding below the 618786 on the upside. So this stands a lot of chop. So the euro dollar should be chopping in this zone. And then whether when it breaks to the above side, I know where I'm going. Right, Mr. Tucson? So we're stuck. Ian? James, Emil, we're stuck until we do what? We either break below this green box, then we know we're coming down here. And if we break above the pink box, then we're going up there. That's simple. And it's extremely high probability trade once it decides the direction it wants to go. And what if this is, again, this ends up breaking down and we don't hold the support zone? Because we could easily come here and bounce to go breaking out. But if we come down and we don't hold that, then this is my A, this is my B, and this would scream going down the Magic Fibo for my C. And what happens after you get an ABC, three-wave correction? We're looking for another five-wave back to the upside, which would put us back into the 16 to 18 area. Got it? So that's the plan. Now, if we just go breaking out, fine. I still target those numbers. If we don't, we just come back here and bounce. I'm still targeting these numbers, but we got to get across this pink area. So one way or the other, force price to prove its intentions, then you can trade and take high probability outcome, right? And if not, we start breaking below, then we're going to wait for this to come down, or we short this down here, then I look to go long. Amen? All righty. What about the pound dollar? It's kind of in the same boat. The pound never reached its initial targets yet. And what was that? From the swing point high to swing point low, once we took out this 129 area, which was right in this area, I said that weeks and even months in advance that the pound reversal was likely going to go up about 700 or so pips to test the Magic Fibo. And then once we're likely going to see it do what? We're likely to see it go up, come back to retest the Magic Fibo to then bounce before we got to these targets. Well, the euro, we made them. We reached both of these in a little Louisiana land yap above. Then we got a correction. The pound's still working to get these targets, and we came close, but we're still not there yet. So what have I been saying for the last several weeks? Buy the dips, and look for this to achieve these targets. Highest probability. Well, is this over? This still could come down and retrace before we finish it, but I do think we're going to reach this. Amen? So once my dollar starts breaking back down, this will continue to reach its target. Look at the one past this 1272, 142. That's a long way off, right? Another 700 pips to get from where we currently are to this target. Well, we still got 100 pips to get back here, maybe 200-ish pips to get up to this target, and then 700 to get up to that target. But that's where we're headed. So any dip should be bought until we get to these targets. Once we get to the targets, at some point, we're probably going to come back and retest this Magic Fibo. As we get into these extensions, we might come down to retest, perhaps before we go on up here. Well, is it possible we could grind up to here and just keep going and go up to that 142? Sure, it is possible. But I look for when the software starts turning over and I look for extensions to start being reached. You typically get some sort of retracement. And that is typically when you go breaking out, you typically come back to where you broke out from, or you come back down to the Magic Fibo again, which is sloping upwards right now. So just like we did here. I even warned you before we get up here, we were going to come back and retest that weeks in advance, and sure enough, it did it. And now look at it, ripping higher. Why is it ripping higher? The software is screaming to go higher. Same thing with this one. Monthly's pushing up, steep slope, angle separation. Weekly is pushing over and slingshotting higher and higher, just grinding up toward those targets. And my daily is back in overbought territory, continuing this slingshot palooza. It moved from oversold toward overbought. It's been slingshotting for months and months now. Look at that. Over and over and over and over. And we just keep stair-stepping higher and higher. So, yes, we could get a little bit of a pullback for the daily to slingshot again, while the weekly is still pushing up. So you say, uh-oh, well, this is overbought. It's not that it's overbought that's the problem. It's when the PAI starts hooking down. So if we get a weekly to do this, Mr. Tucson, that's what the software tells us. We get a weekly PAI hook and we get a trend momentum cross and we get some slope like that. We get a little angle separation where green crosses below the red, and we call that a weekly PAI hook, trend momentum cross. Then what does it mean? Just like it did here. I'll draw a line there for you to keep your eyes there. What happened? Well, we got a trigger lower. Triggers are awesome. I could set the software on ready to trade mode. You come over here into the expert advisor and do an automated trade and go into properties, and you can put in your stop loss, take profits, etc. But you come in here and tell them, I want to take a trigger long, a trigger short. Do I want a slingshot long, slingshot short? Any trigger is a good trigger. Always leave those true. So I could set this in advance to when it triggers short, I can sell. When it triggers long, I can buy. And I could set that days, weeks, or even months in advance, depending on what time frame you're on. So this weekly, I talked about setting this weekly down here when we were pushing lower because the monthly hooked and cross. And what does a monthly hook and a cross equal? Weekly cycle, weekly cycle. So once the weekly cycle, that could be setting that automated trade manager. Let's buy that trigger long. And if it took 2, 3, 4, 5 weeks, you stay in ready to trade mode, and then boom, it'll enter automatically for you. And we even anticipated we were going to get a weekly cycle up. How did we know that? Because we had our targets telling us where we were, not only what direction we were headed, but exactly where we're going. And we're just shy of that target. So I think there's a little something, something extra. So do we get another little pullback? I'm going to continue to buy the dips until I get to these targets. Once we break these targets, then we'll look for another pullback and eventually we'll work our way toward that 142. Fair enough? All right. So let's circle the wagons back on the dollar index and watch this closely. Just like the euro and the pound are testing their resistance level, the dollar index is testing its support level. I do not think we're going to go breaking out and breaking up. But is this possible that in the inverse relationship, this is my A, not terrible looking A, this was the B, and now we're going up in C to come up to the Magic Fibo. That is possible. But when do I start giving the nod for us to go long on the dollar index? That's when we start closing above this pink box. Then by all means, we're definitely going to go up here and test the Magic Fibo. Well, what if we break below this green box? Then we're definitely going to go down here, that 1448 at 97, and then onward and downward toward that 96 at 1272. Highest of highest probability. So what direction I think we're going to go? I think this bounce is going to fizzle and we're going to make another lower high, lower low. But until we start breaking above this pink box, then I get bullish for us to go up and test the Magic Fibo. Amen? And if not, and we start closing below this green box, then by all means, we're going lower, which in turn means the euro dollar and pound dollar are going to continue to go breaking out as the dollar breaks lower. Amen? All right. So one more time, euro, we're watching the resistance zone. We're watching the support zone on the dollar index, which equals the resistance zone on the euro dollar. So if we hold this support zone, then we're likely going to go breaking out. If we don't, then we break below this box, we're going to come down to the Magic Fibo. Just like the dollar index, inverse of that, if we hold this and we break above this resistance box, then we're definitely going to go testing the Magic Fibo up here, which means that euro dollar would break down further towards that 108 level and test the Magic Fibo on the daily chart for the euro dollar. As we would go up toward this 103 area to go up and test the Magic Fibo on the dollar index. But the bias is we're probably going to fizzle, make a lower high, lower low, but it is what it is. So expect the dollar index to chop in this zone until price proves either we go breaking out toward the Magic Fibo or we break down toward the extensions. Amen? Higher probability, lower high, lower low than this breaking out, but it is what it is. So in the interim between support and resistance, if you're scalping in here, fine, but I'd be quick to take profits and be in a position of authority so that if this thing just pops up and then all of a sudden tanks lower, you're not caught on the wrong side. So this is typical. We get a bounce here. Why? Well, the software was telling you we were going to get a bounce. This is the euro dollar, and my daily's still up, but who's telling us we're getting that pullback? 4 hour. right? We got a 4-hour hook and a cross, slope angle separation. So who's going to cycle down? 1 hour. Who cycled down? 1 hour. So you see, as a scalper, man, you could tear this thing up, and the dollar index was inverse of that. My daily is still kind of down, pushing toward oversold, but who told us we were going to bounce? My 4 hour. Perfect. So we got the hook and a cross. So early on, when this started bouncing, I had my PAI hook, trend momentum cross, slope angle separation. So as a scalper, I knew this was going to go higher till at least my 1 hour made it to overbought. Guess where we are? Overbought. See it? Like clockwork. And last but not least, the pound. How did we know the pound was going to start looking at give us a little bit of a pullback? Same thing, 4 hour. Trigger lower, scalping lower. I would not go short and hold short, even though this could possibly come lower, but we got that support zone. So the same thing here. I'd be in a position of authority as my pound dollar is pulling back, yes, but how much lower do we go? Well, same rule here. We can do the same thing. From this prior low to the current high, we have this 618786 zone. So I'm going to color that in for you. 618786 zone. This is my support zone. And if we come down here to bounce, by all means, that continues our target toward that 136, 138 level. If not, and we break below the support zone, then the likelihood we're going to go test the Magic Fibo, which again is sloping upwards, that even as this starts chopping sideways to lower, I'd look to salivate to buy it off of this area. So here's my big support zone. My short-term support zone is here. We break that, we're going to go down to this next support zone, which represents my Magic Fibo. And if we got that, and we saw this pull back to here, just like the last time, I'd look to buy that dip and for price to continue higher. Fair enough? What about the dollar yen? Dollar yen is bouncing off of support. It did the exact same thing as the dollar index. It went from its low to high, tested the 786 to bounce. So is this going to go breaking out, or is this going to make a lower high, lower low? So you continue to rinse and repeat with Fibonacci's and the software. So Mr. Tucson, from this recent high to the current low, we can see we got to break back above this 146, 147 area before we start getting more bullish with the dollar yen. Dollar yen has some unfinished business to the downside that I do think we're going to come and visit before long. And this could be just temporary bounce, and this is my resistance. So just like the dollar, the euro, the pound, all of them, this dollar yen is stuck between support and resistance. We break resistance, then we start targeting 149.60, 150.43. If not, and we fizzle and we break below this 141, then we're targeting 138, 137, which is en route to the one that's already on the chart, this 136, 134 area, which we still haven't reached yet. Amen? So is this the A, the B, and we go up in C to finish this? Then we come down? All I can say is, Mr. Tucson, if this baby goes rallying up there, I'm going to look to sell it to come back down. Otherwise, we fizzle and we just break below this box. I'm targeting 138.80, 137.74. All right, there you have it. And last but not least, if you have any recommendations you want me to look at, stocks, commodities, futures, treasuries, crypto, anything you want to look at, just let me know. Same thing with the pound yen. We got a nice little bounce going, but is this the beginning of a bigger move up, or is this the beginning of a high, low, lower, high, lower, low? Bigger correction, I'd be careful. Yes, the software on the pound yen was saying buy this, bounce, but you should be in a position of authority because we did go up and reach that extension. And typically, once you grind to an extension, you typically want to come back to revisit the Magic Fibo, which you can see we did that exact thing. And now we're bouncing again. If we continue, yes, we could go up to where we're just 197, but we also may get this high, low, lower high, push us down to this extension down below, which is where we're in support resistance zone, and price has to prove itself. If you stretch this out, bring this down, we can see we're testing that same critical zone from the high to the low. We're testing that 786,618 resistance zone, which is part of the area which is danger. So when I see price action in this zone, that's telling me if I'm scalping that up, you better be taking some profits at this point. Yes, it could continue, but it also could reverse and come right back down. So as a scalper, you use the same methods. You use the software, hooks and crosses, and you use the extension retracement zones. And when you get to those zones, why would I be taking profits here? Well, A, from the high to the low, the bounce off the Magic Fibo, we're in the danger zone. Danger zone means take profits, be in a position of authority. Now let's go over to the software. Why would we be thinking about taking profits based on the software? Because guess who's in overbought territory? Looking for a potential reversal. Pound yen. My 4-hour, move that over here, is an overbought territory. So not only, Mr. Tucson, from the high to the low, there was your trigger to go long to scalp that up. Why would I start taking profits? We got a daily to officially hook and cross, hook, and we got a 4-hour to cycle from oversold to overbought. We got a trigger higher. See, I could set that, buy the dip, take profits, automatically take profit one, take profit two. And at this point, I'd be in a position of authority. If it continues, great. If it reverses, it'll pip me out for more profit. But when my 4 hours overbought off of that bounce, and you're in a technical picture where you're in the danger zone, 1 + 1 = 2. 1, we're in the danger zone. 2, the software is overbought. So, hey, it's a perfect time to take your profits, take it and run. Or at least be in a position of authority. So if it continues, great. And if it reverses, it'll pip you out for more profit. All right, there you have it. Now let's go to the markets. We've been talking about the markets pulling back, and I believe this is what we're underway. Be careful. We're at a very critical level. I don't think this low is the end. Amen? I don't think this low is the end of this correction, and we're ready to go blowing off top and go into the 64 to 6,600 level. I think this is a good area for us to find a resistance zone, and we get a little swing point, lower high, lower low, or perhaps this could be an expanded flat correction, which if this is my A, my B could potentially go up and make a slight higher high, give us a B area. Then we come back down in a C to make a new low. So my call at this juncture, Mr. Tucson, is this is not the low in which we're done and we're ready to go blasting off into the blow off top. I think we're going to get resistance and we're going to turn back down, or we get an expanded flat and then we turn back down. Either way, this is kind of screaming, we need a new swing point low. Amen? All right. And if you stretch this out, you use this down here where I think we're ultimately going. But if we take the current swing point high to the swing point low, where are we stopping in our tracks? Who could have guessed? Who could have thought? Who could have anticipated we were going to test at 618? Like clockwork. So if you're long ES, for those of you that trade futures, I would definitely be in a position of authority. meaning that if this reverses, I get pipped out for more profit, and I've already taken some profit. If I have multiple contracts, I'm taking some off. Because again, high to low, we're in the danger zone for us to get rejected. If we go breaking above this 5950 area, then by all means, I'll start targeting 6,036, 6,067. But that's the danger zone. Every market is the same. Same software for every market, same support and resistance based on Fibonacci's, Elliott wave, the MPA PE5 version 5.0 software. This is the danger zone. Be careful. Yes, this could go higher, but I don't think this, even with us going higher, is the breakout to the blow off top up here. I think we're going to get another push lower to make a new swing point low below this area. Amen? That's the plan. And if you drill down to these lower time frames, this is looking a little exhausted, and this looks like a three-wave move in the making. Let me fix this real quick, get that out of the way. Come back over here. Let me do that and show you where we're going. This looks like an A, B, C type of move. So maybe we extend just a little bit more, then we come back down. And this does look like a bigger degree, and this is on the lower time frame. This looks like the A wave down. And I don't know if this is the A or could be a 1. And this retracement could be my B or 2. And if it's the 1, 2, then I expect a lot more downside. If it's the AB, then we would expect at least a C wave down toward my original target, somewhere around that 5,500 area. What is that from? Rinse and repeat. It's from the prior low to the current high, that 55, 54 to 5,000 range, this big lighter green box, fine tuning or somewhere around that 618 retracement. This is where I think we're ultimately headed. That this correction is going to continue for weeks into June, maybe even July, and I'll push this back a touch, before we go breaking out to all-time highs and we get to our blow-off top, 64, 6,600 area. We're due for another push lower. I warned you about the correction, and we got underway. Now we're getting, it looks like a three-wave correction back up. This looks more five-wave down. This looks three-wave correction. So that sets up another five-wave down, likely going to take us into, by the time we're done, somewhere around that 5,400, 52 area. Got it? Amen? So be extremely careful on this bounce. We're testing the danger zone, and I would not be surprised to see this get rejected. Even if we go popping just a little bit more, we still need another push lower. Because this looks like A, this looks like B underway. And what happens after A, B? You come back down into C. So at least a new swing point low. And if this continues where we get 5 down, 3 correction, 5 down, 3 correction, then that's setting up this further move toward my original targets of 54 to 52 before we're done. And again, this is likely to start reversing. Maybe we top out today and start reversing tomorrow, or top out tomorrow, start reversing. But I would be in a position of authority. Looking at the software, it is saying more or less the same thing. Let me come back over here to the ES, S&P 500, and right now we can see the daily is slingshotting up at the moment, and my weekly is in overbought territory, which is another warning sign. We need to eventually take a little depressurization like we've been doing, slingshot, slingshot, slingshot. So I do think we're going to get a correction down. What I'm looking for the software to do, paint the PAI Picasso, MPAP 5 Picasso, I'm looking for this weekly in the coming weeks to turn over, this to turn over, to do one of these slingshots higher as we get a retracement, slingshot higher. And the goal is to get down here sometime in the summer, which we're moving into, we're almost into June, so that we pull this down into June, July. Sure. Then we start breaking out as we go from summer into fall, maybe even into the end of the year. We go for that blow off top. Amen. My monthly is turning over, which we talked about as well. That with this monthly hooking across, we expect a weekly to cycle down. And my weekly was working on it, came close, but it never quite got there. So I think this is part of this retracement, high, low, lower, high, low for this retracement while we turn over to slingshot, turn over to slingshot, and this continues higher. Amen. So be careful. Mr. Tucson, my daily is in a position to engage, disengage. We have this phenomenon that we call engage, disengage. So if the red hooks down, blue right there hooks down, and green hooks down, then we're not only going back to this low, we're going to make a new low. And that would lead us for a daily cycle down. And then as my daily cycles down, we'll get sucked and pulled into this Ichimoku cloud, which is right in the zone we're looking for from the prior low to high. That same zone, my 618, 786 zone in this area, but sucked down into this area to bounce and cycle back up. So once we get the lower high, lower low, I'm going to go in here and I'm going to tell my trade management system, expert advisor, properties, and I'm going to tell it it's engaging and it went long right now because of that slingshot. So I'll leave it there until we get a few pips of profit. But I'm going to go in here and tell this to right there. Trade trigger long? Yes. Trigger short? No. And any of the other? No. So I'm going to do that. And then I'm going to go in here and go ready to trade mode. Fair enough? All right. But I wanted to show you this so you can see what it looks like. When it pops in, it puts your stop loss, your take profits, and it'll automatically take profits when it reaches those. Move your stop loss in the profit. Everything's automated and automatic for you. All right, let's continue. So in closing on ES, I do think this swing point low is not the end. This looks more 5-wave with a 3-wave correction, and this 3-wave could extend a little more, and then we'll look for another push lower to make a new swing point. Now, this could last for weeks still, because it doesn't mean as soon as this 5-3 is over, and we get another quick 5, and this is on a lower time frame, we get another little quick 5-wave down, that's the end and we go breaking out. No, we could get another 3-wave correction, get from the high to the low a 618 retracement to yet another push lower. So we'll see how this ends up playing out. But this is the reversal zone when I think we're cooked and I'm ready for this thing to go blasting off to all-time highs and to shoot for my 64 to 6600 level. But first things first, I don't think we're going breaking out now. I think we're going to get another push lower, which means at least a new break below that swing point. And that swing point right now is at 5750 area. Amen? 5750 area is that swing point low. So it's a couple of hundred points that we're likely going to get a lower high, lower low. And then if again, we turn this into a 5-wave down and we get another 3-wave correction, then that sets another push lower to make yet another new swing point low. Got it? So in closing, Where should we go? We're at least going to make a new low below 57.50. Could this go a little bit higher in that B wave? Yes, if it expanded flat, it could actually go and make a slight new higher high into 6,000 and then reverse. But more than likely, if we can't break this pink box, we're going to push down in this swing point low, setting us up for that next 5 wave down. Amen. What about NASDAQ? It's doing basically the same thing on these lower time frames. It looks like it's working on its 3 wave move, right? A, B, C. How much more can we go? This could extend a little bit more, but we got the same problem from, put a fresh one on here, from this current swing point high, which is a triple top or so. Come back over here. We've topped and topped and topped and topped. So we got multiple resistance level up here where the prior high was to the current swing point low. We're testing that 618,786 zone, and we're in the thick of it right now. We're in the middle of that 618,786 zone. So this is danger zone for us to reverse. Could we grind a little bit higher? Sure. But I don't think, based on this 3 wave correction, that this is done. We're probably going to get one more push lower. Amen? So be careful that danger zone, we can't go breaking out. What if we break above this box? Then by all means, we're going to target 21.6, 21.679. Got it? That would be my targets. All right. I think I got double lines on here, so I'll remove one of those. And from that swing point, remove this, and I'll put a fresh one in there so we can get an accurate picture from that high to this low, still in that 618,786 zone. And I want you to be careful, because if we can start breaking past this little consolidation point, game on. 21.6, 21.7, here we come. Otherwise, in my humble opinion, James, this is going to fizzle out and we're going to get another push lower, making a new swing point low. Then we can look at buying the dip and going higher. And where's that on that bigger picture? Down here from our correction to the high, we got this big box here. I'm looking for this to continue to grind lower in the weeks to come into summer. And then we're going to get a reversal to go breaking all-time highs to push up in that 23 to 26,000 blow off top, which should come sometime late fall, maybe early end of the year, early next year. Go from the daily time frame, you can see the bigger picture a little bit easier. We've had this beautiful recovery off of what people call the tariff talk, but it has nothing to do with tariffs. The technical picture screen, we topped out on NASDAQ back in December. And we made a lower high and we pulled back, still looking for this danger zone retracement and another push lower. So even with another lower high, we have this downtrending lower high line. We haven't touched it yet, so maybe we go popping up to reach that, then we get pullback, but I think we're coming down here. So mark this on your calendar. I think we're going to come test this 19,000, somewhere between 19,000 and 17.5, honing in about 18.5 area before we go up here to our blow off top. Got it? So before we get up here in this zone, we're going to come down here and likely going to get several weeks of chopping, grinding action. Then we go into the fall, maybe late into the year type of thing, and we go blowing off top. So be extremely careful thinking this is it and we're going up there. I don't see it. I see a bigger correction underway, and I think that's what we're in the midst of right now. And as you take that swing point, recent high to recent low, it's a nice recovery, but it's right to the 618,786 zone. So this is danger zone, as you can see. This is danger zone. So you better be careful. Up nicely today, but that could certainly reverse tomorrow. And this looks more like a 5-wave with a 3-wave correction, and that spells more likely another downside. So just like I did with ES, I don't think this swing point is the low that we're done with, and we're just ready to go blasting off. Anything is possible. Yes, it is possible, but the probability of this just ripping up there is much lower than us correcting further down and making a new swing point low. Fair enough? Everybody good? All right, let's continue. What about IWM? It too is struggling. It's a much different look than the other two. We haven't made any all-time new highs. We retested the highs back in 21 where NASDAQ, S&P, the Dow Jones, all those went to all-time highs, all-time highs, all-time highs, all-time highs, all-time highs, numerous times. Small caps in the Russell, no such thing. So just like I said a long time ago, before we go breaking all-time highs and going way up here, we're going to come below this 160 area. And this is setting the tone for us to do so. So the higher this goes, especially if we can get into the danger zone, I'm going to look to short this back down in a put spread and look for us to go back below 160. And I'm targeting between 140 and 120. That's the plan. So be careful with this. We're probably going to get a retracement deeper into this zone before we go busting up into this area. But once I see danger zone, hey, IWM is at 216 to 228 zone. Anything above, say, 220 and higher is screaming short, short, short. And I would push that out as far as I can go. So if I'm buying a put spread, I'd push it out as far as I can go for us to get down here. But that is the plan. We're going to 140, 120 target. That's what we call Elizabeth, I'm coming to join you, honey. Here comes the big one. And that's where the NASDAQ is going to go plummeting lower down in a 10,000 area. We can show you what we're talking about. We're talking about a monthly time frame. And on this chart, the monthly's not that far away. And on this one, it's not far away, but it's still that 160.50 area. And I think we're definitely going to break below the Magic Fibo on the monthly here to get to my target. But for the NASDAQ and ES, for example, look where it is. It's around that 35 to 3,300 zone. Bring that back over here. So when we get the blow off top, we're talking about this retracing minimum toward this 35 to 33 range. And if that doesn't hold, then we have the next big target for us to go visit where we had the big financial crisis last time. We had the dot-com bubble burst here. Then we went to 2007 financial crisis, the real estate bubble burst. And what happened? This looks like a psychology of a market cycle, and this bubble is going to pop, and we could come back to the base. So I'm looking minimum during the big correction that's coming later this year, maybe next year. We're going to see it come back toward this 3,500 zone and likely even going to push even toward this prior plateau area, somewhere between that 2,500 and maybe 1,600. That would be like the lowest I think we would come. But let's don't worry about how far we're going to go down in the vicinity, but it's going to be substantial. And minimum retracement back toward the Magic Fibo. And remember, this took a lot of years. From 2000 to this low of a couple of years to make that low. We grinded up for a few more years, for about 4+ years. Then we had the financial crisis come, But this corrective action before we went to break all-time highs again was about 13 years, from 2000 to about 2013 before we broke some new all-time highs. That leads us, once we get the blow off top and we start getting Elizabeth, I'm coming to join you, honey, it may be multiple years into the 2030s before we see all-time highs again. The good news is, right, Ian, we can trade to the downside and make money. And even during the period where you get these, or someone told you back here that when we topped out, we were never going to go breaking out before that. It would take us over 13 years before we broke out. You would have thought, well, there's no way to trade this. 13 years, I can't do anything. Sure you can. We can trade to the downside, we can trade to the upside, we can trade to the downside, but there are many ways to play this in the interim. And this bubble pattern, as I like to call the psychology of a market cycle, this thing has been parabolic, and all of these end up the same way. They come crashing back down a lot of times to the base and where they broke out from. So that would put us down about that 1600 maximum decline. Minimum decline is the Magic Fibo on the monthly chart. And likely will probably come down something like a three-wave correction, probably come down here, bounce, get another retracement to another push lower. And this thing could last into the 2030s before it's done. All right? Any question? But again, during that corrective period, you might have a few years of an upside retracement to set up the next down leg. Amen? And notice NASDAQ didn't do what the ES did. We topped out here at the bubble burst. Then we came down for that crash. Then during the big rally where ES went back to make a double top, NASDAQ didn't get anywhere close, but it also on the next push during the financial crisis didn't make a new low. So the markets don't follow exact script, but very close. So even this one, we topped out in 2000. We didn't go breaking all-time highs to around 2016 area. We tested it for a while, and we finally broke out somewhere around 2016. So for 16 years, we didn't break all-time new highs again. But look at the trading opportunities to the downside, upside, downside, upside, etc. during that same period. So even when I say we may not see another all-time high, once we do a blow off top, and we get Elizabeth, I'm coming to join you, honey, and we come at least down to this 10,000 range. If that doesn't hold, then we got some levels down to 8,000, etc. And we could even come down to this 5,000 potentially. Then it's not all doom and gloom. We could take advantage of that move, but then you get such great buying opportunities for the next push into the 2030s where we'll go making some all-time highs again. Got it? All right. So any questions on that? The Dow, if those that look at the Dow, more or less did the same thing. Back in the great bubble burst and .com, then we rallied. The Dow went on to make new highs, not by a whole lot, but some new highs. And then we went to the financial crisis where it still made a new lower low. So all of these can come back to this plateau level, and the Dow could come back to the maybe this 12,000 range, potentially. Minimum, it's going to go toward the 26,000 area where the Magic Fibo's sitting. And if that doesn't hold, then the doors ajar to come back to sort of these plateau levels, 17, our 14 level, etc. But I would not be surprised to see something like this, where we come down, we bounce, and then we make another push lower, maybe 20,000, maybe a little bit lower. Maybe we come back toward this plateau level around 12 to 15 area. We shall see. But mark my words, this is not all. We're going to the moon, Alice, and we're never coming back down. We need one of these. And looking at this chart, it doesn't look like much. But from current price action back then to where it went, that was a good 40+% decline, just under 50. And then the financial crisis, doesn't look like much on this monthly chart, but we did upwards of 55% decline. So We kind of use the same math to do a 55, 60%. That puts us around 18,000. Wow. That's the kind of pullback we're talking about. Amen? All righty. So be careful that I don't think, even as the Dow, that this is the end of this little retracement and this is all beautiful straight up. We're going to 46, 47, 50. I do think we're going to get there. That's the blow off top area. But I think we're due for another correction to come back down near the 618, 786 retracement to then bounce and go up to the blow off top. Now on the smaller time frame, we'll drill down on this daily even. I don't think this latest move is over. So we go to like an hour chart, like I've been showing you for everyone else. I don't think this swing point low is over, where this is the end and we go breaking out. I think there's a good chance we're at least going to retrace to this 618, 786 zone. If we don't hold that, then we're going to get a new swing point. But this latest price action where we corrected here and start ripping higher, I don't think this is over. I don't think this is the end either. So drilling down, I don't think this last swing point is the end. Harold, I think this is going to rally and fizzle. We're going to make a new swing point low, and we're going to go breaking below 41.3. All right? So be careful on this bounce. Guess what we're doing? You can zoom this in, stretch that out, and we can start to move my chart out of the way here, and we'll zoom this in. But this is likely to find resistance up at my 618, 786 zone. So we have this zone in which we're likely going to find resistance. So what I'm looking for is a lower high, lower low. And this correction we talked about, this isn't it. And we're ready to go blowing off the tops and go up to the 46, 47, 50,000. I think we're going to get another fizzle manizzle and we're going to get another push lower. And then again, if this is my 3-wave correction, then we get another 5-wave down. And that it goes up with another 3-wave correction that could even push us lower. And I'm looking for, on that daily chart, the recent low to the current high. We're looking at this 618, 786 zone. So let me take some of these out. We got too many in here, but I'll do that real fast. And we're looking for this zone to hold, this low up to the current high. We're looking for this zone right here to hold. So we're stuck between big support down here and resistance up here. I'm looking for this to fizzle and push lower. And likely we could get a 5-wave down, 3 correction, 5-wave down, and likely going to push us toward this 39,000, maybe 39.7. But this is the sweet spot down here, right around that 39,000. So this correction should last weeks, even into summer. And as we get down here, I'm looking to go long to shoot for my move back up into the fall, maybe end of the year, where we start targeting as 46, 47, maybe as high as 50. Amen? But again, Harold, you drill down, and what does this look like? This looks like a 5-wave down and a 3-wave correction. 1, 2, 3, 4, 5. And this is looking like, since that bottom, 1, 2, 3. And then what? Another 5-wave down. So I don't think this swing point is the end of this correction, and we're ready to go blasting off. Technically speaking, we need another push lower. So this looks like this potentially is my A wave down. We're working on a 3-wave correction in my B wave. And then we're going to come down in a C wave, which would make a new swing point low. And then once we're down here, we need to see. What does price do? Do we do another three-wave correction, followed by another push lower to get down to my target zone? Or do we bottom from this low and give a five-wave up? Right, we go up in five waves, for example. Then we come down in three waves to set up. We're working on the blow off top. So I'm always watching, drilling down on lower time frames. And that's why I look at the futures because they trade 26, 23 hours a day for 6 days a week. That's why I look at the futures because you have all of that data. When you look at just like SPX, you get gap up and gap downs because when the markets close, you don't have the overnight price action like you do on ES. You don't see those gap up, down, and open because there's constant price action going through. But the same rule, five-wave down, three-wave correction. Yes, this can grind maybe a little bit more, but I'm looking for this to reverse and push to a new low. NASDAQ, five-wave down, three-wave correction. Yes, this could go a little bit higher. Then I'm looking for another push lower, which would push us down and continue the journey below this swing point low into ideally my target zone right around that 19-ish, 18.5 is like the sweet spot, but pushes down toward 19, 18.5. But Harold, I'm not trying to tell you that this, when it reverses, is going to be down here by next week. Anything's possible, but no, we're talking weeks into summer. Then when we're down here, June, July, August, whatever it is, then we look going into the fall, the big blow off top coming to that 23 to 26,000 on NASDAQ, 6,400 to 6,600 zone up here on the ES. And again, Russell's the only one that's not going to participate. When it gets up to that 216 to 230 range, the higher it gets, 220 and above, is screaming put spread to the downside, targeting below 160. Amen? 160 and lower with my longer term target 140 to 120. How about that? All righty, let's continue. What about black gold, Texas T, the Beverly Hillbillies? Kind of warned you about this one, that we may need that last flush. So I know there's a lower time frame. I'll go to the daily, get more current price action. But we're watching this level from the recent low to the high. We got to watch this 58, 57 zone. If we can't handle that 57, 58 zone and we break it, then we're going to get that flush down to the lower 50s and maybe even push down to 50. All I know is if we can get oil prices to break the support zone and start targeting highest probability to the low 50s to 50 area, we get down in this green box, I'm looking to go long for a big bounce. So is this part of that low, high, hold higher low, and we start breaking out now and we keep grinding? Or do we get the one more flush before we're done? And the more we get this overlapping chopping price action, the more this looks like we want to go breaking a new low. So I'd be extremely careful on the long side. I definitely, as I said here during that bounce, be in your position of authority because we may get that flush back down. So we close below 57, then target 53, 52, and 50. Nice little move lower. We close below 57. Then we have 75% chance we're going to 53. 70 plus, we're going to 52.50. Potential continuation of 50. That's kind of where I'm thinking. If we can get down to these lows, then we're likely going to come to 50. Amen? And when is that? We break 57, it's over. Now, we have to go breaking above this critical resistance level, and that is that May 24 low right there, May 23, excuse me, May 23 low that we broke below, and we've been retesting, rejected, testing, rejected, tested, rejected. So this is why that's a critical level we have to get above. Now, for example, if Black Gold Texas Tea, the Beverly Hillbillies, breaks above that level, then by all means, we're going to test the Magic Fibo. So we got to close above that 64 area, 64.50. We got a swing point here about 64.60. We got this swing point, went to a high of 64.19. So kind of blended 64.50. We close above that. Then we're going up here to 67. Couple of buck move. But if this doesn't hold the 57, then look out below. We're going to the low 50s, 53, 52, and likely even push down to 50. When we get to this green box, this is an area I'm looking to buy. Amen? Well, what if this holds and we go breaking out? Well, like I told you, we break above that critical former resistance, turn support, turn resistance, and most recently resistance, 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 resistance. That if we close above that, then by all means, we go and test the Magic Fibo. All right. So the long of it, we got to close above this 64.50 area, then we go long. Or is that 65? Let me make sure I give you the right number. Take that off. 64.50. That's correct. 64.50. We break above that, we're going to 67. Nice move. We don't, we start closing below 57. Extremely high probability to the downside. And while we're stuck between resistance up here at this big green line, so I'll change that just in the settings to red, just to show you that it's definitely resistance for now. And we're stuck between support. I'd like to see Black Gold do one or the other before I trade this. Right now, I expect more of the same. And we've been doing it for days. Just chopping, grinding, really going nowhere. Break above 64.50, we go long. We break below 57, we go short. Then, Harold, if we do get the flush down here, man, this is a big buy. Big salivation buy. So I'll type in sal, a salivation. I'm going to salivate should we come down in here and look for that big run. Amen. So up and until then, expect a lot of chopping, grinding, grunting, laboring action. Just chopping and grinding in here. We close above, we go long. We close below, we go short. And if it does take the short route and start heading down to my sow country, that's a big buy. What about gold? I warned you about gold. I kind of tracked this model for you. Wow. We talked about last week we were going to go down to 31.50. We were bouncing going to 33.50. Huh. Now what? Supposed to come back down. And here I'm looking for this to push lower, then give us another 618 type of retracement from that high to this low. We'll come back down, whatever that low is. And then we do a retracement. Then we look for the next push. But I think highest of highest probability, gold's going to come back down toward the Magic Fibo on the daily chart, which is still a few $100 down. Amen? That's a critical, this should be on every chart you own. A Magic Fibo. It is truly magical. And we're long overdue to visit this guy. And I warned you when you were up here, we're going to have several $100 correction. No way, gold is too, it's just rallying. Gold's not going to go down that much. Technical pictures scream this. And we're in the midst of it. And even last week, I said, we're going to go down to, before we got there, so we can go down to about 31.50-ish. Then we're going to reverse and go to 33, 33.50. Bingo. Now what? More downside. So I expect this stair step to go down, retrace, down. And this still could take weeks and weeks before we're down here. Amen. So any questions on gold? Once we get down here, I'm looking to add to my position long term and shooting for gold to go up to 5,000 and not a straight shot. What comes down in this 29, 3,000 range ish, maybe 28, 27, whatever it is. And then we go up. I don't think it's going to just double from 27 to 52 in a matter of weeks or even months. I think over the years, we're going to continue higher. That gold's in a bull cycle for quite some time to come. And I think there's a lot more upside to come clearly. But I do think we're going to get further pullback. And as that plays out, that's setting up beautifully SLV to make that push lower down to my $25 or lower. I have standing orders right here, good till cancel orders to buy SLV shares at 25 and lower. Why? Because once we get down here, Harold, we're going to go ripping higher in the months to years to come. And we have a target. We got to go to the weekly chart to show it to you from all-time highs to lows, which is way over here. We're going to this target 60, 70. 75% chance we're going to 60, 70 plus we're going to 70, and we're sitting at 30. That's a double minimum from right now. But I think we're going to get when gold flushes down, silver's going to flush down, and I'm anticipating when it come down to the extensions around that $25 or lower. So I have an alert set at 25 bucks. When it clicks at 25, I'll get an alarm to remind me to check my broker accounts to see if those orders were filled. And if not, then maybe we missed it by a penny or some. I'll jump in and go ahead and buy those orders. Why? Because if we get down to 25, we're talking double, 2.5 time, maybe 3 time to get up to this target. And why is that important? From the all-time high to that COVID low over here, we already took out the 618. We tested up near the 786. But the writing is already on the wall. We closed above. We got a daily candle body, a weekly candle body, a monthly candle body above that 618, which tells me I have a 75% chance I'm going to 60. I like those odds. So I'm not trading options on this because how long is it going to take? I would think we should be up here by, I don't know about by the end of this year, but probably by the end of next year, potentially. So I don't know timing wise is the toughest part. But is price going to get to this target? I would say this is about as guaranteed as anything out there. If there's such thing as a guarantee, we will reach $60 and $70 range. That is a given. It's just a matter of is it into this year, is it into next year? I'm thinking more likely end of next year than more than end of this year, but you get the point. I want to see the dip into 25. I'm going to load up on SLV shares. And I'm going to hold them until I get my target of $60 to $70 range. Could even break that and continue higher. Silver is so underperforming gold. Man, look at silver from this 11 high to the low. We not only broke all-time highs, we've done it over and over and over. And from that high to that low, we already reached the 1618, the 272, pushed above the 2618, en route to the 3618. We already topped out above this one already. Look at silver. We're nowhere near that, right? We're nowhere near. We're just testing the 786, 618 zone. So imagine if silver catches up and reaches the 1618, reaches the 272, tops above the 2618, en route to the 3618. Those are some insane numbers. So now you can see why, Harold, even if we just get up to 1618 or push the 272 to 2618, you're talking 300 to 500 range. Wow. That would be a 10x from down here. Could it get there? You betcha. Silver is a finite item out there. It's not unlimited, and they use it in everything. So supply and demand, when demand is high, which silver is extremely high demand always, because it's everything. This could easily start skyrocketing. So now you see why I'm so confident we're going to reach that $60 to $70 range. Well underperforming. All the silver's got to do is start to catch up with gold and pushing the 1618 toward the 272. And we can get in at 25 bucks or right now at 30. I like it. That is an excellent. Or go to Costco. You don't want to buy stock? Go to Costco and buy a silver bar. Invest in silver. A lot of places you can buy silver in your IRA account. Do a lot of things with silver. If you want to hold the silver or you just want to hold stocks, you get the point. But we're definitely going higher. Silver is a just a spring ready to do a moonshot into 60, 70, maybe $100 range. Amen? But don't forget, I do think we're going to get that correction. And if we drill down on the daily, part of this recent high to low, all of this chopping, grinding action makes me think we might get one more flush. And if gold flushes down to the magic Fibo, we're going to break the Fibo like we did last time. And this is when gold pulled back, but didn't even reach the magic Fibo. So we do that again and we reach the Fibo or lower, then this is definitely going to come below this swing point low, which puts us in the $25 range. Amen. So that's the plan. Be careful with this chopping here before we go blasting off. I think we can get one more dip, and my goal is to get below 25 or lower to then salivate country to buy and hold until silver gets to that $60, $70 target. All right. A couple of things I want to look at is TSLL. Hopefully you took advantage of our calls on TSLL and Tesla. Back in October of last year, we talked about buying this and we said Tesla is expected to go to 500 and TSLL, consider that trade. It went from $9 to 41 bucks, not too shabby. And you can see here, back in October of last year, I'll scroll down, right there is expect Tesla to hit 500, consider TSL trade. That was the end of October, right? When I announced it. And what happened on the chart? Let's go back over here. What happened on the chart? This one right here. Back in October, you see that week of October 24th, right there, we were down here at that $9 range, and it went from 9 to 41. Then this time around, I said, we're setting up again. My target zone was below 15 was the buy zone. Anything below 15 was a buy zone. Well, needless to say, as it broke 15 and kept going lower, I kind of said the same thing. This trade's setting up again, but below 15, here's my target. Tesla's going to do another $500-$600 run. TSLL should make a move toward that 45 and 60. And then as we were breaking lower, right there, add more TSLL, the lower it goes. We reached the buy zone. And then when it was breaking lower, I said, the lower it goes, keep adding because this baby's going to reverse. And sure enough, whoops, I keep doing that. Sure enough, what happened? We went from our $6 range to 15.85, and we're looking for a blast off. Remember, Tesla has a big announcement in June about their cybercab, robo-taxi, etc. That could blast us off into the stratosphere. And that's just historically what Tesla does. When Tesla is hated, you don't have a whole lot of price action on here. When Tesla's hated, it went ripping from $4 up to 19, and then we came back down here. Oh, that's TSLL. Sorry, not Tesla. Let me go to Tesla. Sorry, I figured that was the one. But Tesla has a historical reason. Every time it's hated, it goes ripping, and this goes way back. You get these big pullbacks, it goes ripping. You get the pullbacks, it goes ripping. So no reason to believe we're not going to the stratosphere again with this next announcement. I even said when they were burning Tesla's vehicles and Molotov cocktails and Tesla pulled back, I warned everyone with these pullbacks, you should be buying the dip. And during that pullback, when it was down into the 200 range, 220s, I said when it's around that magic Fibo, we're going to go blasting off. And that was the plan. Low, high, higher, low. We held the 618786 zone. We're blasting off. And where we're likely to go? 530, 560, maybe as high as 660. So this is my target up here between that 550 to 660 area. And I think as we get into June, July, we get that big announcement. I think as the markets give us a correction slash blow off top, I'm looking for Tesla to go ripping higher into late fall, maybe toward the end of the year. But I suspect we're going to be way up here on Tesla, and our TSLL is going to rinse and repeat like it did last October. It's going to rinse and repeat, which is well underway, to go ripping into the $40, $50 range. We shall see. But that's what we do here, right, Harold? We give you a great trading opportunity. Speaking of which, I can't no buy, sell the whole recommendation. I can't tell you what to do. I just tell you what's technically on the chart and where the high probability opportunities are. And I can disclose that I do own TSLL, and I bought more shares the lower it went, and I'm looking for this thing to blast off. Buy low, sell high, buy low, sell high. We do that with crypto, we do it with everything, right? All righty. What about my other one of interest? And we'll go over here to NinjaTrader. NinjaTrader is now available on MetaTrader 8, MetaTrader 4 and NinjaTrader 8. And this coin, CONL, is the TSLL to Tesla. This is to Coinbase. And Bitcoin's been ripping, looking for a pullback on Bitcoin. And we're going to look for a little pullback on this. But it wasn't long ago, we were below $10 and we tripled up here. Now I'm looking for a little dip and then look for this to go on to extensions. And I think we got a good bit to go higher on this as well as Coinbase starts ripping higher as well. And we can see, I'll go over here to this dollar yen and put this to Coinbase so we can compare the two like Tesla and TSLL. And coin, same type of thing. Coinbase has been ripping higher as of late. Yes, I'm looking for a little correction, come back down, and then another blast off, and likely going to go back toward the highs and even push into. So we come over here to drawing tools. What's new in this MPA software is the Fibonacci retracement and extensions right there, like you see on the trading platform we use. But from this high to that low, we're right at a critical level, James. On Coinbase, we're testing that 618. We start closing above that area. Then what are we going to shoot for? Extension up here at 380, 410 area. All we got to do is get a candle body close above that. Then we have a 75% chance right there. We're testing the critical level. Yes, this is the battle zone between that right there, 306 and 270 price we're testing. This is a danger zone, but once we start closing above the 618, 75% chance we're going to 383, which is my 1448. and a 70+%, we go on to 1272, which is up there at 410. So what's the plan for CONL to go popping? What's the plan for Coinbase as Bitcoin makes its final thrust into the end of the year toward that, say, September, October, to go ripping toward 150, 175 or higher? This should push Coinbase, etc., into some new higher highs. Amen? That's the plan. So I do think we're going to get a bit of a pullback. So I'll come back over here and go to Bitcoin. I do think we're due for a little bit of a pullback after this big rip. So this is kind of telling us right now that this little move, and we could just go blasting off still, but it's due for a pullback. So I warned you last week, expect Bitcoin to start giving us a pullback. Well, the next day, we got this big sell-off. How accurate was that? This right here. Last week, all the way at the top, expect Bitcoin to pull back soon. That was on the 22nd. So what did Bitcoin do? On the next day, the 23rd, kerplunky. Now we're grinding back up. But notice from the high to the low, we're testing what? Can't make this stuff up, guys. 618786 zone. So on this smaller move here, we're testing a critical resistance level. Stretch that out. We're testing it. So this looks like we probably going to get the flush down to a new swing point low off of this bounce. So I think we're due for a push lower. And I would not be surprised at some point before we blast off into that 150 to 175, I wouldn't be surprised to see Bitcoin start coming back toward the Magic Fibo, because we broke above and we really, that one day we kind of did retest it and took off, but we really haven't had a decent pullback to retest it. So Ian, James, Harold, Mr. Tucson, others, I think we got a much bigger chance we can get a pullback before we go blasting off to reach our 150 to 175 target. So be extremely careful right now, because the recent price action, I warned you last week, we're due for a pullback the very next day. You're like, wow, that's just the technical picture. And now this looks like a three-wave type of correction. So this probably is going to push lower. Could just blast off, anything's possible, but this was not enough of a correction. This was consolidation and blasted. We consolidated, we blasted. Third time was the charm. We consolidated, blasted once, twice, three times. Well, this one's not really consolidation. I think this is going to end up with a lower high, lower low, give us a better correction. And I would love to see this baby kind of chop and grind over the next few weeks, like our markets, and we push lower toward those corrections in a 618. I want to see this baby start coming back toward the Magic Fibo. Again, it's sloping up. Right now, it's between 92.8 and 91.6 at level. The two black numbers represents this ribbon, but this is sloping upwards. So even as we chop around for days or weeks and start going lower, this thing will still continue to slope up. So I'm not saying we're definitely going to come down to 92,000, but maybe we come toward maybe 95 as it's sloping upwards in the next several days. Each daily candle that comes, this thing slopes a little longer, a little bit more, a little bit more. But be careful. I don't think we're ready to go blasting off just yet. I think we need a correction, and then we go blasting. What if this happens, William Bruce? What if we get this baby to come down here, back the truck up, and look for the next big push? What have we learned about Bitcoin? Well, we buy low and we sell high. It wasn't long ago, back in 2022, when this baby bottomed down here at 15,000 list, I kept saying for months and months during that period, all of this time we started breaking 20,000 head down to the 15 and grinded sideways and finally broke back above 20. All of this time, which you can see was multiple days, it was like weeks and weeks. Buying Bitcoin below 20,000 is a crime. It's a steal. It's unbelievable deal. And look at where we are. And notice the trend. We get a halving. Every 4 years, Bitcoin have the blue line is the halving. We got a halving in 2012, 2016, 2020, most recently April of 2024. The next halving is 2028. So what do we know about halvings every 4 years? Bitcoin has a crypto winter and a crypto bull run and a bearish run, if you will. Some people call that a crypto winter. When we get the bearish pullbacks, they are substantial. Every time Bitcoin is pulled back in 90%, 80%, most recently more like 75 to 80%. So that's coming. That's going to happen in September, October of this year. It'll start pulling back into 2026. And we looking to buy into this zone when Bitcoin gets down into the 50,000 slash 30,000 range. That is this 20,000 buy at a steal of a price, which is actually over here, but you get the point. But each time, 12 to 18 months post halving, Bitcoin rips higher. Then you get the crypto winter, and then it bottoms before the next halving. It kind of grinds into the halving, and then post halving, 12 to 18 months, it rips higher. And each time from this high to this low, where did Bitcoin go? We went to 272. During that halving of 2016, we topped out in December of 17. Amen? Then we got our crypto winter low, which was before the next halving in 2020. And then post halving in 2020, what did we do? From the high to the low, we went up to the 1618, right around that 57,000. So the most recent one, we pulled back into 2022 when Bitcoin was below 20,000. Perfect time to buy. And what? 12 to 18 months post halving, which was the 24, we're going into late 2025. Notice each time we topped out in 13, topped out 4 years later in 17, topped out 4 years later in 21. We're going to do what now? We're going to top out later this year in 2025. And then the crypto winter lows, 14, 18, 22. Guess what? We're going to bottom out in 2026, Harold. Highest probability. So stretch this out, current price action, and this is my nibble zone in late 2026. We follow these cycles every time. It's 100%. Every 4 years, it runs for 12 to 18 months. Every 4 years from the recent high to low. So in 13, 17, 21, 25, we're going to top. And then in 14, 18, 22, we're going to bottom when? In 2026. Already know right now, well in advance, where we're going to bottom in this area. And then price-wise, based on historically how much Bitcoin pulls back, this puts us into this about 50,000 to 30,000 range. Amen? And we're not finished to the upside, but the bulk of the move from 15,000 to 110,000, and we were a little bit higher. We're pulling back a little bit, but that's the bulk of the move. But yes, there's a little something still left on the table for us to go up to that 150 to 175. That's my 1618 from this swing point high to that swing point crypto winter low, 1618. The prior one, we went to the 1618. The one before that, we went to the 1272. So this is why highest probability we're likely going to 175 area. Well, what else do we know? From the crypto winter lows, Bitcoin has always done a 10 to 20x in price. So This past low was 15,000. 10x that puts us in the 150-ish target. So this is why I told you when this was bottoming, I told you your target was 150 to 175. And it's still that target. Amen? Still that target. What a thing of beauty. So, in closing, be careful. I do think we're due for a correction. It's all blooming and going, isn't it? It's just a ripping. But we're in a danger zone. Last time we were in a danger zone, we tested it and popped out. We consolidated and popped for the third time. I even kind of told you where it was headed. It was headed up toward this 112, 113 level. I went to 112 and change, whatever that was. See if I can get that swing point high. Basically 112, 111, 965. Reached the target. So what's next? Harold, we're probably going to fizzle and give a deeper correction. I would love to see us come back and revisit the Magic Fibo. If we do get this correction along with our markets and they go visiting the target zone we discussed, I'd like to see Bitcoin at least come down toward the Magic Fibo. Again, this baby's sloping upwards. So it's not going to be at 92.8 each day passes. It'll go higher, 93, 94, etc. So this is going to slope up, a few weeks of a correction, and then we look for a blast off. Amen? And what's the target? Way up here, 150 to 175. That is my target. What happens when we get up here in, say, September, October? Then it's time to close all my Bitcoin positions. Unless you just got tons of Bitcoins, I'm closing and taking profits and then using those profits to buy Bitcoin when it's down in that 50 to 30,000 range, which will happen in what? 2026, which is over here. You can see my nibble zone over there. And that's just taking consideration Bitcoin is going to rally to 150, 175, and then we're going to get the typical winter pullback. So I'm going to set alerts with my brokers to buy Bitcoin when it's at 50,000 or lower. I'll start nibbling, and the lower it goes, the more heavily I start nibbling. So when everybody's saying Bitcoin's a scam, it's this, it's that, and everybody hates Bitcoin and nobody wants to touch it down there, that's when you should be bold in buying it because the next cycle higher is going to be in the hundreds of thousands. Got it? So rinse and repeat, 15 to 150. Well, if we go down to say 30, we're talking probably 300,000 would be the minimum target. We shall see. So once I get the final all-time high, and then we get our 2026 toward the latter part of 2026 low, then we can run a Fibo from the high to the low, and then that would shoot for our targets in the stratosphere. Amen? Any questions on that? So again, you joined us late. We know that Bitcoin over historically, every 4 years we do a halving. At which point, 12 to 18 months post halving, Bitcoin goes on a big run. The big run tallies from the low, which is before the halving, to the ripped and high, is typically at least a 10x, 10 to 20x historically. Minimum 10x. So when Bitcoin hit 15,000 and change, that 10x puts us in the 150-ish level. Then we use your high to low, you get your 1618 extensions. That is where we hit every time, minus this other one we did the 272. And the one before that off the chart did a 272. So we did 272, 272, then 1618, 1618. So no reason to believe we won't do it again, which is pushing us near that 175 target right there. Amen? And then the 10x from 15 puts us in the 150-ish. That's where my 150 to 175 target comes from. And I told it, screamed it, yelled it, did everything but send out a smoke signal. I guess I even did that too. That 20,000, you should be buying Bitcoin because we're going to 150, 175. Bingo, we're getting there. So buy in 2026, Harold, and we'll rinse and repeat in 2029. Why 2029? Having in 2028, 12 to 18 months later, puts us into the fall of 2029. So again, every 4 years on tops, 13, 17, 21, 25, bottoms, 14, 18, 22, 26. Kind of fits the mold. The next halving is the 2028. So we'll buy in 26 and sell in 29. We bought in 22, we're selling in 25. We bought in, 18? We sold in 21. So you kind of buy and hold for 3 years. And then you take all of that money and you buy some more when it dips way down low. So with that, any questions? So drill down, current price action. I know this is a busy chart with a lot of lines, but watch this zone we're in right now, and I'll zoom it up real big for you. Watch this zone we're in as I stretch this move from the recent high to, let me get the actual low right there. We're testing the 618 zone. 618786. It tested, got rejected. We're testing today. Nice recovery. I really don't think we're going blasting off, but if we start closing above this 110, say 111, then we'll start targeting 112.8, 113.5. If not, and we get this rejection and we start looking for the low, then Harold, we can use our 3-point tool, which is this guy right there, 3-point tool, and we go from the high to the low to the lower high. So we're reversing here. Then we're looking for about 104, maybe 103 area. That would be my first target, then 101. And if that doesn't hold, then we don't hold these targets, then down here to 96, and likely even test the Magic Fibo. All I can say is I can't say, I guarantee Bitcoin is definitely going to come down as Magic Fibo. But all I can say is if it does, that's a great buying opportunity, because then we could go from 90-ish thousand all the way to that 150, 175, which is still a nice hearty move. Amen. And let's just say it was to do that. And we go to our target up here at 150 to 175. You're looking at, if we can get down here, we're looking at about, it's kind of split the difference, about 160-ish, about a 75% run. If we can get down to this Magic Fibo and bounce to get to 160. Not too shabby. Otherwise, if we just go from where we currently are, we're talking about a 50% run. Well, Emil, guess what we did from the crypto winter low? 1,000% gain. Wow. From that 15 low down here up to that 160, 150, 60 area, about 900 plus, close to 1,000, getting near that 170. So we get to 170 right in there. Right about 1,000% gain is kind of the expectation. That's not a bad investment, is it? Those are hard to come by. Ripping. But that's the plan. So any questions? Ethereum, be careful with Ethereum. It has been underperforming. And where Bitcoin is breaking all-time highs, we have struggled, and we keep bogging down at 4,000. And then we got the big sell-off. So this is critical levels. We are above the Magic Fibo. So I would love to see this baby go breaking out, certainly. But this zone from the low to the high, we must hold the 618, basically that 1900 down about 1700 area. We need to hold that because if we don't, during Bitcoin's correction, say we get this baby to correct too, and we don't hold that to go blasting off, and we start breaking below this, then the door's ajar to make some new lows, 1100, 1000, not good. I'm not saying that's what's going to happen, but any correction should hold above this green box, and then we bounce. Idea, I love to see it just go blasting off. But in my humble opinion, I think Ethereum has a very good chance to retest the 4,000 range. We've tested multiple times, test, fail, test, fail, test, fail. That we're going to test at 4,000 when Bitcoin goes ripping up to that 150 to 175 area. I would highly expect Ethereum to do the same and at retest the 4,000. We break that, then we got 4590, 5200 area to look forward to. All right, so be careful on this. We must hold this sport box, otherwise we could see some new lows. Not good. And likely we're going to at least go back to 4,000 when Bitcoin gets back to where it was and breaking new highs. Ideally, I'd love to see Harold, this baby, go ripping up here and break above, and this thing could go catapulting higher very fast once we take out that resistance level. But in my humble opinion, I think we're going to retest 4,000 at least as Bitcoin gets to that 150 to 175. So I use Bitcoin as my guiding light, meaning when it's at that target zone, I'm selling my Bitcoin, my Ethereum, my iBit, any other type of Bitcoin investments. I'm going to sell those. Just like if Ethereum, if it's at 4,000 or higher, wherever it is when Bitcoin gets there, I'm going to unload my Ethereum, my ETHU, all of these things that you might have, and my crypto, etc. Solana, still think Solana's got a good chance. It's at a critical juncture as we speak right now, and I'll take these off and put you a fresh one, but it's testing the critical zone from the high to the low. We're testing that zone. We're above the magic Fibo, but we're testing, pull that down just a little bit to that level. We're testing that 50% 618. So we got a little bit of headwind to get through. But once we do, the target's up here in the threes, even 400 range. And the last time we were here, well, it's underperforming Bitcoin right now because Bitcoin went and made all-time new highs, but it has started to bounce nicely as of late. And we're getting close to your extension. So watch this 210 area. Start closing above 210, then the probability we go to 307, 330 becomes extremely high probability. Amen. And this baby could go ripping higher. And last but not least, some of our miners. I do think miners are going to go much higher in the months to come as Bitcoin finally goes breaking out. And I think when Bitcoin, this is one thing I want you to keep an eye on with BTC. Let me come back down here and show you real fast. I still have it on my, no, I don't. So Bitcoin, when we find after a correction, which I think is going to come, we start breaking above that 120 to 130 area. The profit margin for the miners goes exponential. It goes berserk. So if we can get Bitcoin pull back and the miners pull back, everybody pulls back a little bit with Bitcoin, then Bitcoin goes for the rip toward its 150 to 175 target. When it starts getting in that 120 to 130 area and higher, those miners like Mara, etc., should go to the moon. I'm looking for these things to blast off when that happens because their profit margin goes through the roof. And we talked about way back when this was below having, we were bottoming out in that $7 to $10 range to buy, and even during the correction to buy. And even the most recent correction to buy, we're still in profit, well in profit still. So I've been buying and selling and buying and selling, but I'm holding for this to go blasting off to the stratosphere. And I think we got a very good chance to go breaking that 30 plus range we visited a few times and go into the extensions once Bitcoin gets there. Well, what's the bottom line? Like I told you, Bitcoin gets that 150, 175 target, wherever MAR is, if at 20 bucks, 50 bucks, 60 bucks, I don't care. Wherever MAR is at the time in which Bitcoin reaches its target zone, I'm selling. Amen? All righty. So with that, I'd like to say good luck. God bless you. May the pips be with you. I'm humbled and honored to be your mentor and instructor. Join us again tomorrow. And as we like to close, that's it and that's all. We'll see you tomorrow.